What if the biggest crypto opportunity of 2026 isn't Bitcoin? Isn't Ethereum, and isn't even something you can trade today? For years, investors have been trained to believe crypto moves in simple cycles. Hype, crash, recovery, repeat. Capital is moving differently. Builders are thinking differently. Governments are reacting faster than ever before. And the same strategies that made people rich in the last cycle may fail completely in the next one. So the real question isn't which coin will pump next. The real question is, what kind of crypto market are we actually entering in 2026 and who will be left behind when it arrives? To answer that, we need to step back, rewind the clock, and understand how we got here. Setting the stage: history, key figures, financial systems. Crypto didn't start as an investment. Bitcoin was born in 2009 as a response to a broken financial system. A silent protest against banks, bailouts, and centralized power. Satoshi Nakamoto didn't promise returns, he promised an alternative. But markets have a way of changing ideas. By 2013, Bitcoin became speculation. By 2017, crypto became hype. By 2021, crypto became an industry. Exchanges replaced cypherpunks. Venture introduced smart contracts, opening the door to DeFi, NFTs, DAOs, and an explosion of experimentation. Billions flowed in. Millions joined. And for a moment, it felt like a financial revolution was inevitable. But revolutions always come with excess, and excess always leads to a breaking point. Origins: how today's trends were born. To understand crypto trends going into 2026, we must understand what failed before them. The DeFi summer of 2020 promised yield without risk. NFTs promised digital ownership without speculation. Algorithmic stablecoins promised stability without collateral. Each innovation carried a powerful idea but ignored one basic rule. Systems under stress reveal their weakest assumptions. As capital flooded in, shortcuts replaced discipline, leverage replaced patience, and narratives replaced fundamentals. The seeds of today's trends were planted quietly during this chaos, not in headlines, but in the infrastructure being built while markets were distracted. Rise: the expansion before the collapse. From 2020 to 2021, crypto entered its fastest growth phase ever. Total market capitalization surged into the trillions. Retail investors poured in globally. Institutions began experimenting cautiously. Layer 1 chains promised speed. Layer 2 South promised scale. Cross-chain bridges promised unity. Everything moved fast, too fast. The assumption was simple: adoption would outpace risk. But innovation without restraint has a cost. And that cost arrived sooner than expected. Breaking point: when the system snapped. The collapse didn't begin with one event, it began with trust erosion. First, high-yield platforms froze withdrawals. Then, algorithmic stablecoins unraveled. Then, major funds and exchanges collapsed under hidden leverage. What shocked investors wasn't just the losses, it was how interconnected everything had become. One failure triggered another. Liquidity vanished. Confidence evaporated. And suddenly, the question wasn't how high crypto could go, but whether it could survive at all. This moment changed crypto forever. Fallout: what the market learned the hard way. After the crash, the market split into two groups. Those who left, and those who stayed to rebuild. The survivors began asking different questions. What actually creates long-term value? What breaks first under pressure? What survives regulation, bear markets, and human error? Out of the wreckage, new priorities emerged, and these priorities are shaping the top crypto investment trends going into 2026. Before we talk about what will matter in 2026, we need to talk about what won't. Speculative forks failed. Unsustainable yields disappeared. Celebrity-driven hype collapsed. Quick fixes didn't restore trust. Rebranding didn't save broken models. And copying past winners proved useless in a changed environment. The market realized something critical. Crypto cannot grow by repeating 2021 strategies in a 2026 world. And that realization gave birth to the trends that matter now. Modern parallels, the trends defining 2026. Trend number 1. Infrastructure over hype in 2026. The strongest investments won't be flashy, they'll be foundational. Scalable Layer 2 networks, modular blockchains, decentralized data availability, interoperability protocols that actually work. These aren't exciting narratives, but every future application depends on them. Just like early internet infrastructure made Google and Amazon possible, crypto infrastructure today will define tomorrow's giants. Trend number 2. Tokenized real-world assets. One of the most overlooked trends going into 2026 is the tokenization of real-world assets. Stocks, bonds, real estate, commodities. Instead of competing against traditional finance, crypto is quietly integrating with it. This isn't rebellion, it's convergence. And history shows that the biggest winners often emerge where old systems meet new technology. Trend number 3. Regulatory-aware crypto. For years, regulation was seen as crypto's enemy. In 2026, it becomes a filter. Projects built to survive regulation, not avoid it, are attracting serious capital. Institutional money doesn't chase chaos. It demands clarity. The result? Fewer projects but stronger ones. Trend number 4. Decentralized AI and data ownership. AI needs data. Data needs trust. Trust needs decentralization. Crypto's next wave isn't just finance, it's ownership of intelligence itself. Decentralized compute, data markets, and AI-aligned blockchains are forming quietly. And like early DeFi, most people won't notice until it's already massive. Every financial revolution follows a pattern. Innovation, speculation, collapse, consolidation. Transformation crypto is no different. The difference this time is awareness. The market is no longer naive. Builders are cautious. Investors are selective. And hype is no longer enough. That's why 2026 won't look like 2021. It will look more disciplined, more institutional, and far more unforgiving. 3 clear takeaways. Takeaway number 1. The next crypto winners will be boring before they're brilliant. Takeaway number 2. Real adoption matters more than narratives. Takeaway number 3. Survivability is the new growth strategy. Warning, open-ended thought. But here's the uncomfortable truth. Every cycle creates new winners and new victims. If you're still investing based on hype, influencer predictions, or past performance alone, you're playing a game that has already changed its rules. The biggest risk going into 2026 isn't volatility. It's misunderstanding the market you're actually in. Call to action. Natural and non-aggressive. If you found value in this breakdown, take a moment to like the video. It helps more people find serious, long-form analysis like this. Subscribe if you want deeper, story-driven insights into crypto, markets, and economic shifts most channels never explain. And comment below, which crypto trend do you think will define 2026, and which one do you think will disappear? Because the future of crypto won't be decided by hype. It will be decided by those who understand the story beneath the price.